Hi there, traders. This is Brad Gilbert with today's trading action. All right, now the yen higher again after suspected intervention. Now, this is just ongoing. You'd think after the week the yen has had that the BOJ would just come out and say, listen, we've been messing around with things here, and that was us. But they haven't done that, right? So, but what they have done is they got the initial flush out. We saw the market retrace, another bang through the market, retrace. Now they're getting the follow through. It's sort of starting to weigh on the dollar a bit. But this is where today comes in, right? Where the action is. And this will really test the resolve of the BOJ because we do have the US non-farm payrolls, right? This is the biggest sort of head kicker in the market. And why I say that is because there's a bunch of numbers here that come out. There's a whole range of them. You've got the ISM services data there as well, which is quite often called the non-manufacturing PMI numbers, very important. These numbers here, if they come out strong, the dollar is going to bounce aggressively, right? That is just the cold hard facts. The Bank of Japan, whether they know something or not, I don't think so. But if these numbers did come out weak, there would be a sigh of relief. There would be a bit of a dollar sell-off, right? And with that comes opportunities on a whole range of different instruments, right? Now, equities probably one. If we get weak numbers, you're going to see higher equity markets. If we get strong US payrolls, we get weaker equity markets. And, you know, just following Fed's of Jerome Powell, the Fed chairman's spiel the other day, he's saying, you know, the next hike is not up. And it was a bit of a softer tone. So equity markets have been rallying at this point. And we are seeing a bit of like a risk on sentiment, right? If I just come back to the main page here, you can sort of see that, you know, equities are going up. North American equities, actually equities sort of everywhere. You've got the four little amigos there, Euro, Sterling, Aussie, Kiwi going up, and the dollar going down against most things, right? Obviously, all to do with the appreciation in the yen. So what do we got here today? Where are the trading opportunities? Well, if this was a normal data release, like retail sales, would have been ideal, like a second tier number that doesn't gap and jump around all over the place, then that would be perfect. Inflation numbers, you know, they're a bit jumpy as well, but nothing like the non-farm payrolls. The thing is, we are getting close to breaking the camel's back here, right? And dollar Swiss to me is the key to it. If it goes, the rest of them go. Now they are pushing and driving the dollar down against the yen. That's what the BOJ is doing. So we want to see here if dollar Swiss goes, euro goes up, dollar index comes off, and all these other pairs go up. Now, what do we need for that, right? To me, that's what this goes with what Powell was saying in his press conference the other day. So they would be happy to see, you know, a softer dollar, right? And we do have opportunities here, but this is the problem. The non-farm payrolls, it's not like your friend, right? It's there to kick the crap out of you. So just be aware. Now, what we need is, if I just come over here to News Squawk and we go through the components here. Okay, so the non-farm payrolls itself, the numbers they trade first and they hit the market based off is the unemployment rate, okay, and the non-farm payrolls. These are the expected numbers, 243 and 3.8. Now, the US numbers have been strong, right? And I've sort of been saying for some time, they've got to turn. But you know what? It's probably time to sort of go, you know what? This is the reality. Objectively, the numbers are strong and they are remaining strong. So we've got to be keeping a very close eye on that. And in particular, the range of the forecasts. If the range is above 280, I mean, if the outcome is above 280, okay, and below 3.7, we are going to see a strong dollar move. And that's going to really impact dollar yen and all the other pairs. The dollar will rally against everything. Okay. Now, on the other side of the equation, okay, if we get a number below 150 and above 3.9, well, the dollar's going to fall again against everything. And that's where the current trend is. If I was looking for a direction, for me, it's probably like the bounce back here in the dollar is going to be so aggressive and wild. Whereas, you know what? It is actually going down at the moment. I know it's been pushed artificially by the BOJ, but all these instruments, Euro, Sterling, Aussie somewhat, Kiwi, even dollar CAD, they are on the precipice of big moves. They're waiting for confirmation, right? We really need the inflation numbers, but they will take it upon themselves. If we got weaker US data today, then the writing's on the wall, okay? And it works with the BOJ, works with the dollar move, and I think we'll see a flush out, and especially on dollar Swiss. So to me, the trade today is sell dollars on weak numbers, right? That's the trade. Now, I'm sort of been saying to you, but the numbers are strong and they have been strong. Yeah, that's great. They are, and they have been. But you know what? I don't care what they might come out as. It's what works best for us for this trade. Now, if we look for opportunities here to get into the trade, as I said, with a strong dollar, right? These things are going to be back in the range. It's messy. Okay, Euro, Sterling, Aussie, Kiwi. You're going to see dollar CAD sort of fly up. Probably goes with the oil move. And the dollar index will sort of bounce. This is the problem. We don't know what the real impact on dollar yen could be. It could rally 200 points. It could rally 100. It could gap 50. It could jump around 100. I tell you what will happen with the all this calamity around all these moves in dollar yen. You can be sure as hell that when it comes time for the price to open, I reckon you're going to see a 50-point spread either side of the market on the release. Right? Or potentially up to 100. Everyone will pull their liquidity, right? There's going to be nothing. So if you're thinking of trading dollar yen, good luck, because it's going to be loose. And if you're sitting there with open positions, well, check your account balance, because you're going to need every part of the margin to cover that, and you'll get flushed out on a blip, right? So don't come crying to me or your broker and saying, hey, listen, I got like jammed on dollar yen. They're like, yeah, that happens. So anyway, what I'm focusing on, I look at where things are going and what fits the perfect trade here. And still, this is not going to be easy. If we get weak US numbers, okay, we've got trend lines to work with, which is beneficial. Euro is sort of already sort of right on the cusp of breaking, if I can get that out. So is sterling, so is Aussie, and so is the Kiwi, and so is dollar CAD, so is dollar Swiss. Right? These things are waiting for something to confirm the dollar weakness. We have it with the non-farm payrolls, but understand getting into each of these trades is problematic because of the liquidity constraints around this data, right? So this is the $1 million question. How do I get into the trade, right? So you could be looking to trade live, because what I'm expecting, if we got weak numbers, you're going to see a massive shoot up in all these instruments, okay? Euro, Sterling, Aussie, Kiwi. I'm probably almost looking for retracement. Like they may jump up 50, 60, 70 points, right? And then quickly drop 30. You've got to be ready to get into that trade at that point. Placing pending orders here below the market. Okay, you can do it, but you're open to slaughter if there is gapping, right? My bet is still that the data is strong, right? That's what I'm still sort of running with, okay? It has been strong, but I'm just trying to work out where the best trade is. And so what you'll be looking for is confirmation here, right? So if we got a number sort of, okay, below 150, if we got a print above 3.9, once again, both look unlikely. We're looking for lower, to really get the dollar shuddering lower. Average earnings month on month, year on year lower, and that would really do it. The kick in the belly would be the non-manufacturing PMI numbers coming out 15 minutes later. If they came out weaker too than 50.5, then we would see the dollar rocking. Now, as I said, I'm not trying to cover all bases here. I think the data is going to be strong, but for the best trade, we want weak numbers, right? That will get everything moving. It'll refresh all the markets. Okay, we've already had a bit of a refresh on everything that's going around at the moment, but we've got great setups. As I said, if this was a retail sales number, a nice second tier number, it would be awesome, because we've got great technicals. We've got great setups. The problem, it's Friday. It's non-farm payrolls. There's no liquidity. Right? And I've been trading for 35 years. Anyone who's telling you this is going to be an easy trade are kidding themselves. It's easy to say what's going to happen. Executing the trade is the big problem here. right? So I know I've sort of spoken a fair bit about that and embellished it, but that's exactly what we're looking for. Right now, at the moment, we do have looking at the markets, US equity futures are up. We do have a risk on profile, dollar down, sets the tone for what's going on. Okay. And that's pretty much it. The dollar, like this puppy here, the beast. Okay. The yen is creating not really a shitstorm, but it's really put the spanner in the works. The BOJ have done the 1, 2, 3. They need the kicker, the knockout punch to get the dollar moving lower, and that's the non-farm payrolls. And that's why I think a weak dollar trade is the one for all of us, right? Good luck with your execution. As I said, with this number, because liquidity is going to be an uncertainty, decrease your trade size. You want to make some money from it for sure, but don't put too much cash in it because your stop loss is going to get railroaded if it's too close to the market. All right. Good luck, guys. This is actually as close to sport in the markets that you're going to get. There'll be a huge amount of audience watching it. It's going to be exciting to see how it comes out and what the reaction is in the market. And in actual fact, I'd love to see a strong number and see what it does to the yen and the BOJ. That would be hilarious. All right, guys. All right. Good luck. All the best. Cheerio.